This is a Stock Trading Reality Podcast, episode 159.
Because it'd be cool to quit my job, but, I kind of want to know the numbers beforehand before I get into that, because that's a big jump.
This is the Stock Trading Reality Podcast, where you get to see the realistic side of a trader's journey. Get inspired and stay motivated by everyday normal people who are currently on their journey to trading success. And this is your host, who is greatly inspired by watching Ches swing a golf club, Clay Trader.
This was a perfect fun fact, fell into place just beautifully because Ches is not here today. He is taking some vacation. He's out. He posted a picture in the chat room today in the mountains of, I think, British Columbia, which, so for you Canadians, he is helping to support the Canadian economy. So make sure next time you see him in the chat room, you thank him for that. But he's out skiing, snowboarding, hopefully not dying. Last thing I need is a text message that he's got a broken leg or whatever. But I guess he's out there getting some risk out of his system, it sounds like. But Ches is not here, so it is going to be just a one-on-one. But also, with the fun fact, when we were down in Florida meeting with members the day of, before the actual event, we went to Top Golf. And I know we've talked about this in previous podcasts, but Ches, when he showed up, you could tell that he didn't really play too much golf, and that's fine too. I don't really swing a golf club. But to see Ches's stubbornness in a way of, you know what, I have some things I need to work on, and then to see him just chip away at it, no pun intended, over and over and over again. And then by the end, to see the progress that was made in a few hours because of his persistence, because of his desire to want to figure things out, to his desire to want to get better at it. It really was inspiring to kind of just sit back and observe and say, yeah. Well done, Ches. Well done. He kept at it, and none of this is on the vlog, so it's not like he was doing it for the camera or anything like that. It was just him of his own, desire to get better and figure things out. And knowing Ches now, I wish he was here, because usually, when people are praising, it's kind of like, this is kind of awkward. I don't know how to respond other than just to say thank you, but I don't feel like thank you is enough. But so Ches doesn't have to respond here. But I kind of now wish I could ask him, does he have, it wouldn't shock me if he's got some golf lessons set up now with some golf pro or something, just because that is really how his mind apparently operates. He wants to just get really good at whatever he's doing, and I've seen that happen with trading, and just to be able to sit back and watch kind of a little miniature journey of, hey, I want to get better over a course of a few hours at Top Golf. Yeah, that was inspiring to just sit back and observe. So, Ches, thank you for that. I know you weren't trying to inspire anybody, but hey, you did. For today's interview, crazy stuff, and I mean that in the most complimentary way possible. And yet again, more data with the excuses, and why just excuses aren't very popular around here in terms of reasons why you can't do this or that or whatever. And I'm not going to spoil anything, but I will just say the numbers here are crazy. And, then after the podcast stopped, I talked a little bit more with our guest, and he's making the system work for him. He's not doing anything illegal or anything like that, but he's out there hustling. He's out there getting stuff done, and I absolutely loved it. It inspired me. It motivated me. And after this, I feel like I want to go and try to, form some more streams of income, because this is it's good stuff. Yes, from a trading perspective too, but just kind of in the life in general viewpoint, there's definitely some great dynamics that are going on. Our guest is Rick, and he hangs out in the chat room quite a bit, and we talk about his alias and stuff right at the beginning of the conversation. But yeah, definitely stick around to the end. All sorts of good stuff here, so let's get to it. Rick, welcome to the show.
Hello, Clay.
How you doing?
I'm doing awesome. How are you?
Good. You gave me the permission that I can grill you for as long as I want to, so there's no time constraints here. So I don't know. You may be regretting that decision when it's 7 hours from now, and I'm still got you shoved up against the wall trying to grill you with questions. But real quick, before I forget, your chat room alias. First off, are you in the chat room much? I know I've seen your name, but I feel like you're not in the chat room a whole ton, or am I just making this? I guess walk us through real quick what your chat room alias is, and are you in there, or am I just kind of imagining things?
Yeah, no, I'm in there. Mollard R1 is my alias that I go by. If anybody out there plays WoW, the little icon that I have is the druid symbol. So that's kind of my avatar that I have. But yeah, I'm in there, periodically. I don't really post a whole lot in the chat room because I'm usually working on stuff at work. I mean, I just kind of have it on in the background when I just kind of just see what things are going on, what plays people are looking at. It's just kind of there to give me kind of idea of, how the markets are going and stuff. So yes, I'm there, but it's more of just a background for me throughout the day, just so I can keep tabs on what everybody else is looking at.
All right, perfect. So my impression is right that you're there, but I feel like you're not always active. So you're there, but not always posting. So that makes me feel like I don't need to go check myself into a mental institute or anything like that for imagining things. But right. Awesome. Well, I'm excited to have you here. And before I go any further, thank you. You volunteered for this, right? I didn't have to pressure you.
No.
You are here voluntarily, right?
Yeah, you put out some email, I think in like December or something, and just said, hey, if anybody wants to be on the chat or be on the podcast, and so I said, well, if you're looking for somebody, if you're in a pinch, let me know. And then you guys got back to me and said, hey, how about February? So
perfect. Well, in all seriousness, I do appreciate it. I do thank you because the podcast goes as the community's willingness goes. So you willing to do this just helps me out and helps the community out. So thank you very much for that. But with all the administrative details out of the way, let's get into the nitty-gritty details. And where did all this start for you? You said you've listened to many past episodes, so this question was coming. But how did you hear about the market, and kind of just what got you interested enough to the point where you didn't necessarily throw in money right away, but you kind of started to the wheels turn in your mind where you may want to get a little bit more hands-on, with your money.
Sure. Well, I guess I'll start off. It actually started when I was actually pretty young. I would say probably 1992 or so. I was probably 8 years old or so. I actually let me go back before that. So I grew up on a farm, and money was always like a big thing that we always talked about. I mean, I was kind of joking about with my friends sometimes. The things that we talked about at our dining room table was we would talk about hunting, the markets in terms of like cattle, grains, stuff like that, and then fishing. Those were like the three main things that we talked about, every single day. So the markets were not a foreign idea to me by any stretch of the imagination. So I always knew that they were there. I didn't know exactly, you could day trade and all that kind of stuff, but I understood, just in terms of like people being able to buy corn and sell corn and stuff like that. I understood that. It wasn't until probably in high school, around the, freshman, sophomore time frame, we had a class, and the teacher said, okay, you guys have $10,000. You guys need to go look at some stocks and figure out what you want to do to, pretty much play money to go out there and see if you can make more money. And a lot of kids, they would just take that money and they'd put it all in like a penny stock or something and just say, oh, well, I'm going to, go all in and do that. And I took a more, slower route on that. I actually looked at, their finances, all that kind of stuff. And I didn't make as much money as what a lot of kids did, but I was positive at the end of it. And I was like, oh, I'm not too bad at this. This was kind of fun. Around that same time frame, we had my brothers. They got into the stock market. I don't know if you guys know the company, The Buckle, BKE. It's here in Kearney where we live, or it's based out of Kearney. And so when
where's Kearney? Where are you at actually?
Okay, so Kearney, Nebraska is
okay.
Where I'm located.
All right. So when you say farm, you mean like straight up American Midwest farm?
Yep. Yeah.
And so, I don't mean to interrupt. I got to rant real quick, just because you made the comment like, well, I didn't make as much money as other kids. Teachers out there, if you are a teacher and you are listening, please, if you're going to play the stock market game, you got to set up ground rules, because all you're doing to your students is literally teaching them, wow, I made a bunch of money by throwing $10,000 into a penny stock. So one day, they very well may actually put their hard-earned money into a penny stock thinking, hey, I can make a bunch of money, because I remember in Mr. and Mrs. such and such class, it actually worked. That's not how it works in the real world. So to teachers, it's just dawned on me, that's actually kind of irresponsible on their part to allow you to put your money in whatever you want, because that would make sense why they made more money than you did. But from theory to reality, that's actually kind of a really bad lesson that they teach some of your classmates that, like you said, they made more money than you. So I know that took us off on a tangent, but in my mind, you did get a lot more practical learning out of it rather than how to become a degenerate gambler with your $10,000. I mean, so
sure.
Do you know any of those kids? Are they like living under bridges now these days or anything?
I don't really follow anybody in my class anymore.
Have you seen any of them clanging a can or anything like that? Okay, I remember you from the stock market game, and you won because you bought that penny stock, and they have no stories of any of them.
I don't really talk to a lot of people anymore.
That's because they all live under the bridges. You don't talk to them because they have no cell phones, because they can't afford them because of that lesson they learned. That's why you don't keep in touch with them, and that's my theory, and I'm sticking to it. So I'm sorry, I rudely interrupted you, but you're in a farm in Nebraska. You didn't quite win that stock market game, and you're in Kearney. You were talking about the Buckle, who is. Are they the store? They're like in a bunch of like malls and stuff, right? Is that the Buckle that I'm thinking of? Okay, perfect. Take it from there.
Like jeans and stuff like that. Right. Clothing store. So that when I was looking at financials and stuff, my brothers, they would go through this and they're like, well, the Buckle doesn't have any debt. They're a solid company, all this stuff, and especially when it's local here, it was kind of like the Cadillac. That was kind of the business that I kind of looked at for all of my stocks for a long time. And so I would try to pick stocks that didn't have a whole lot of debt, more of the financial stuff, not really the technical analysis types things. And so when I was in high school, that was the kind of stocks that I would look at. And we had money in, what's it called? Morgan Stanley, since we were a little kid. And I started wanting to play around with money that was that I could use trades on my own, because here's another side tangent. So I went into Morgan Stanley one day, and you can bleep the name out if you want. But anyway, I went into this company.
Do you want me to bleep out the name?
Yeah, that's fine. I don't care. So anyway,
we'll leave it in then. That's fine.
Okay. So anyway, I go in and I said, hey, I want to purchase some stock. In such and such company, and I didn't have a whole lot of money at the time. And he said, okay, well, how much you want to do? And I was like, can you throw $1,000 in there? And he said, no, I can't do that because I'm not going to make a commission on it. And at that point I was like, man, this is kind of a joke. I'm trying to invest, being a little kid, I didn't really know that much about it, but I wanted to do something. And he kind of like shattered my dreams. I was like, well, there's got to be a better way of doing this. And so about that time, this is about early 2000s or whatever, Scottrade came around, and so then I took a lot of my money out and threw it in Scottrade, and this is more an investment. This isn't like a day trading type scenario. And so I was slowly investing money in Scottrade, putting in there because it was only $7 a trade. So I thought, that's a much better idea than spending $50 for some brokerage to put in your trade for you. And it was a lot of like mutual funds, stuff like that I would look into. It wasn't actually like putting in money into stocks, because I still didn't really know exactly, what stocks were all about, because I was a little bit gun shy of, buying one stock at a time.
Now, how old exactly were you at this point?
I was probably 17 at this point.
And then your mutual funds, what were your requirements? You said you did a little working around. So what criteria were you looking for to from a mutual fund perspective? So
mutual funds, I was looking like I wanted to see 5-10 year gains around the 10% range. Is what I was looking at. I was looking at a lot of big board stocks like your Microsofts, Ford, GM. companies that had been around for a while that I knew weren't going to go anywhere, that just weren't pop-up companies. Those were the kind of things that I was looking at. If I could find mutual funds that had companies in them that had very low debt, I really like those a lot. Those are obviously very hard to find, but there's a couple out there that I was able to find when I was pretty young. But this all took a lot of time to do this. I mean, this wasn't something that I would just spend one day at looking at. I mean, this took like, a couple weeks for me to, pull the trigger. I'm very cautious when it comes to money, so it took me some time to do this.
Yeah, I would assume growing up on a farm in Nebraska, that you're probably pretty, and like you said, your family talked about money, that you're probably pretty frugal. You're not. Oh
yeah.
And I grew up in the same way. Midwest. It's not like you go out there and you blow money on, not that other parts of I'm not saying other parts of the country are not frugal, but yeah, that's kind of our stereotype as Midwest people. It's, they're a little more laid back, risk adverse, we'll call it. Midwest people are a little more risk adverse. So I guess it took you a couple weeks. And I mean, I get it. This was when you were 17. So if you don't remember, that's totally fine and understandable. But I mean, how did you ever overcome those mental hurdles of being risk adverse? I mean, what pushed you over the edge for you to be willing to finally kind of put your money in harm's way by putting it into those mutual funds?
So about that time, 17, I was just graduating college, or just graduating high school, getting into college. There was a guy that my brother was listening to. DTRS was his tag symbol. He's got like a radio show online. Okay. And so when I would work, he kind of told his story, and it was kind of background music. I mean, he'd have, music playing in the background. He would talk about stocks, and he would talk about his personal story about, how he went from a day job to, trading now full time or whatever. And it was just kind of inspiring to that, say like, and he was very encouraging to say like, start off small, don't jump into it right away. And it was very reassuring hearing someone else that had already done that, especially in the early 2000s. And so that gave me a little bit more comfort of saying, okay, well, as long as I start off small, I'm not going to lose all my money. And my brothers were very much, both of them have master's degree in finance. So they understand the markets, they understand how money flows and everything. And I was able to ask them a lot of questions too. If I had an idea about what I wanted to get into, they would sit down with me and they'd look at stuff and we'd kind of hash it out together. And so being able to talk it over with someone was very helpful and beneficial to me. And so that's kind of how I overcame that, of actually being able to put some money into the market.
Nice. So how long did this all go on for? I mean, were you steadily every month putting in money, or is this just like a one-time thing? But I guess from 17 until when were you kind of just doing this pattern of just the mutual fund approach?
I would say probably 17 to 23, 24. I think that's when I got married. So yeah, about 17 to 23. So that'd have been like early 2000s to 2007. That's when, that's the time frame that I was shooting with.
Do you still have that money in those mutual funds?
Not anymore. No.
Okay. All right.
I pulled it all out.
All right. Well, I'm sure we'll get to that part of the story, but so you, I guess I'll let you pick it up kind of from wherever you want. But you got married. I mean, that's kind of when the mutual fund thing stopped. It sounded like. But if you want to fill in any other gaps, go for it.
Yep. No. So about 2007 or so, I got married. Around that time, we decided we wanted to buy a house, and so this is where the money comes out. I was able to use that money to purchase a house.
In 2007?
2008.
So, okay,
2008 is when we bought our house.
You were buying. Let's see, the bubble popped in what? Started to pop in 06-ish. Did you? I'm guessing you got a pretty good deal then on your house. Looking back now,
it was a pretty good deal. Yeah. There was a lot of foreclosures around here, and that's kind of what we were looking at. But by the time that it was late 2000, I think, when we actually purchased our house, and most of the foreclosures and the stuff that was pretty cheap was getting all bought out. There was also like a first-time homeowners loan or something, like it was like $5,000. We were trying to get that, but we didn't qualify since we were so late. So yeah, we got a pretty good deal on our house, but it wasn't as good as what we could have got if it was, some of the foreclosures.
Well, you could always bought 2 years earlier and bought the top of the market too.
Yeah, that's true.
Just as a looking at the glass half full here, I mean, it could have been a lot worse. So I mean, I'm just glad to hear that you pulled out your money and put it into real estate at a pretty, maybe not the exact bottom, but it was starting to turn around. So money goes into a house, and I guess does that pull you away from the market for a while, or what eventually brings you back to getting your eyes, on the markets?
So from here, I can't remember when exactly I get kind of back in the market. I mean, I had some money still in Scottrade that I was able to play with, and when I say some money, I'm talking about $4 or $5,000. I mean, it wasn't a lot. So that's kind of what I had to, I don't want to say quote unquote play with, but that's what I had to work with. And at that point, after listening to this guy DTRS, my philosophy started changing into like, well, how do I go from looking at financials to looking at the technical side of things? Because he would do charts and stuff and draw lines and draw triangles and the Fibonacci stuff and all that. And that kind of intrigued me. I like numbers, so I started to try to kind of transitioning into figuring out levels of support and all that kind of stuff. And, I'd watch YouTube videos and all that kind of stuff, trying to figure out what they were doing, what they were getting on. And I felt like I had a pretty good idea of how that all worked. But I just didn't have the capital to continue to add to that account to actually trade or to do long-term investments like I at the time that I was wanting to. So I just kind of put the money in there, and I don't think I was actually trading it. It was just kind of sitting in there, and I always kind of had the opinion of if I get this account built up enough, at some point, then I'll be able to work with it. So I kind of went on a hiatus where I didn't trade for quite a while. I'd say probably 3 years or so. And basically the reason for that was because I didn't have any more money coming in that I could actually like throw into an account to start, having a trading account. And then 2009, well, actually, sorry, take that back. 2011, 2012, my wife was homeschooled, and we'd had a daughter, and so then the conversation got to be about, well, should we homeschool? You got thinking about, do you want to get your kids in school? How does all that work? And we went to a conference in Omaha, Nebraska, and we were sitting in on this lady, and she was talking about turning your computer into a cash machine or an ATM machine. And she goes, it's so stupid to have one source of income, because if like one job, because if you get fired from that job, you have zero money coming in. And I was like, that makes a lot of sense to me. And she had 5 or 6 different companies. I don't want to say companies loosely, income like streams. Websites and stuff, income streams. Yeah.
Yep.
And she was pulling all this money from all these different accounts and whatnot. And I'm like, that really makes sense to me. I should probably do that. And so I went home and I started trying to think of how can I build an account up without using my one income that I have for my job. And so I started with eBay. I sold stuff on eBay. I sold stuff on Etsy. Sold firewood. I mean, anything that I could do to like bring in all these side incomes in, and I would just throw that into our account. And that was like our, first it was our rainy day account. Then it kind of turned into, well, we can use this to pay off our house quicker. And then once we got our house paid off, then it was, well, what can I do with this now? And I'm like, now I can throw this money into my trading account. So it was like this progression moving on. And it kind of opened up my eyes to, when you see that money coming in, it's like, well, how come I can't expand this? How come I can't set up systems where I'm only spending like 5 minutes doing these things and bringing in money? So that's been the progression ever since probably 2012 of having these income streams coming in.
Okay, I got to stop you there. Are you saying that your house is paid off now?
Yeah, we actually paid off our house completely, and then we sold it. So now we're actually back living on the farm now. So now we have all this money just sitting here waiting for another house that we want to buy.
That's okay. This is good stuff. This is yeah. I'm trying to refrain because once again another data point. I don't have any money. Well, I guess you can always go Rick mode. Rick mode is in just finding income streams from wherever. So I want to just I realize this is not the how to eBay podcast, but can you walk us through like your eBay business model in a sense? I mean, where were you finding stuff to sell? Was this stuff around your house, or were you physically going out and looking for stuff that you could turn around and flip?
Sure. So how I first got into this was I had a friend that okay, I'll go into this a little bit more detail so that way I can actually
please, because I like I said, when people are like, I don't have money, I want to be able to throw like, hey, you can go into Rick mode, and this is you're going to define what Rick mode is and when it comes to eBay. So yeah, be as detailed as you want, because I don't want excuses from people here, because there's solutions out there, and you're about to present a solution. So let's hear it.
So I had a friend that worked for an electrical company, and they at the time sold batteries like AA's and that kind of stuff. And so I was like, well, hey, I need 100 of these batteries, because my kids were like going through batteries with all the toys and stuff like crazy. And so I bought like 100 of these batteries, and I wasn't going through them fast enough as what I thought. And I'm like, well, I don't want all these batteries sitting around for 2 or 3 years. So I'm like, well, let me just sell them. So sorry. So I started going through eBay to try to figure out, well, how much of these batteries were. I know what price I got them for. And then I started just writing down in an Excel sheet, how much I got them for, how much I think I could sell them for, how much were all the fees that eBay takes out, how much all the fees that PayPal takes out, your shipping costs, putting all of those numbers together and then punching that at the end. And I figured out that I could make about 60, 70% back on my money from just the batteries that I got from him. And this wasn't even wholesale. So I sold those. I had $30. This is what I start off with. I start off with $30.
Okay. So listeners, $30 investment. So it takes money to make money, but $30. Okay. Proceed onward.
So I took that money. I sold all of my batteries. I think I made, I don't know, after fees and stuff, I think I had a little less than $100, after I bought some more batteries and all that kind of stuff. So I took 30, turn it into like, say, 100. And then at that point, I found a wholesaler. This gets into a little bit more detail. There's wholesale where you need a business ID number. I can't remember exactly what it's called. I don't have that, but it was buying in bulk. So I would buy batteries. I would buy, at the time I was buying like 300 at a shot. And I would sell all those. I would take all that money that I would make, I would throw it back into more batteries. I'm expanding that. And so it just slowly grew. And in 1 year, I think I made 15 grand in 1 year. And that was all from $30.
And this was this just all batteries, or did you expand into other things too that you're looking to flip?
Yeah. At this 1 year, that was just batteries.
Oh my goodness. I just got the name of this podcast. Turn in $30 into $15,000, and people are going to think I'm talking about trading, but no, I'm talking about hustling. I'm talking about kicking excuses to the curb. That's a good return on investment, $30.
Yep.
Now, I mean, was there a lot of time and effort that went into all this at first, or I mean?
Oh yeah.
Okay, all right.
Yeah. So at the beginning, when I was figuring this out, and I'm not going to say exactly what kind it is, because then people will be like, oh, I can do that, and then my stream's going to go down. But
you're still doing it right now. You're doing it right now.
Oh yeah, I'm still doing it now.
Then do not. Yeah. No, that's your competitive advantage. I do not expect for you to reveal all of that. But so yeah, that's totally understandable.
So
will you tell me afterwards though? No, I'm kidding.
Yeah, I can tell you.
No, I don't want to know. I feel like I want to work to figure it out, but hey, you work to get that, so I don't need any freebies like that. But yeah, keep going. This is good stuff.
So anyway, that first year, I was just doing batteries. The second year after that, my brother-in-law, he's kind of getting a t-shirt company going. The designs are actually pretty cool. It's just like the state, every single state, but it's like in the state, it's got the letters inside of it, really cool.
What's in it? Or you're totally do a shout out if you want. If you want to plug,
all right.
I mean, because
So
you're taking time out of your day to do this for free. So plug away.
Sure. So it's the Stately Shirt Company.
The StatelyShirtCompany.com.
Yeah, I think that's what it is.
You think? Come on, man. What kind of plug is that? You think? I'm just giving you a hard time.
I haven't had any deal with it for a year or two. So anyway,
all right.
So anyway, at the time he was doing his shirts and whatever, and I was like, I said, well, is there any way you can like expand this, because you already get the design, throw this into other stuff. And I said, well, what about decals? And so he was trying to get decals going, and the guy that he was using for that, he was awfully slow, and so his turnaround times to get orders out were lacking. And I was like, well, I can do this. We have a Cricut, downstairs, or actually it was a silhouette, a cameo silhouette. I'm like, give me your design, I'll cut them out, I'll make them, and I'll send them to you, and then we can make some money off this way. So I did that, and then he said, well, do you just want to run the decal stuff? I'm like, sure, I'll do that. So then I had decals on Etsy here locally, and I was making all of them for his site, and then everything here locally, and then on Etsy as well. And from there, I can't remember how much I made that first year, but I did that, maybe $6,000 maybe, just off that. But the thing with decals was it was very time consuming doing all that. Even though my profit margins were so big, it just took a lot of time. And we just had our third kid, and it was just kind of like, it's getting to be a little bit much. Whereas my batteries, I would literally come home. Even now, I come home and I can do them in 5 minutes. So, I make $50, say, in 5 minutes for my batteries, whereas the decals, it'd take me a little bit longer to do that. And time becomes a lot more, attractive, when you have a family.
From a business perspective, margins can be great, but there's always that overlying context, like you discovered, of the time component, though, which can greatly just be like, margins are good, not from a time perspective. So that's
right.
Yeah, $50 in 5 minutes. That sounds good to me. So I mean, second year, you made $6,000 from decals, but I mean, what did the batteries generate off the? Estimate at the low end, so nobody can accuse you of puffing up numbers. So at the low end, what do you think batteries did that second year?
I probably made 16, 17. I mean, it wasn't that big of a jump from the first year. That first year, I spent a lot of time trying to get my listings right, the right keywords, all that kind of stuff. And then it was just adding on a little bit to that from the second year. So there wasn't really a whole lot of change from year one to year two.
But it stayed consistent, though.
Yeah, it definitely.
And when all this started from $30, that's pretty darn good.
Right. So that money, taking that money into a trading account, or close, or whatever it is, that was extra money that we could use for other things. And so at that point, I started feeling like, how much do I really need to replace my income? That's where it kind of switched into, how much do I need to replace my income and all that kind of stuff. But because it'd be cool to quit my job, but I kind of want to know the numbers beforehand before I get into that. Because that's a big jump, because there's insurance, there's just the risk of now you're doing it all on your own. So there's a lot of things to think about, and I'm by no means at all ready to quit my job to go do this and day trading and whatnot. So anyway, so with the side business and whatnot, that was one stream. And then it kind of came back. So this is like 2013, 14, when I started thinking about getting into the markets. Because I'm like, well, if I figure this out, if I can make this work, this would be another revenue stream for me. And so then I started looking into, re-educating myself again, looking at books, looking on YouTube, looking at, InfoHub and all these different places that people kind of talk about stuff. And I was getting all this information, but it seems like there was a lot of discrepancies between stuff that I'd learned before and in one place and then to another place. And I knew I had the knowledge there, and I knew I could do it, but I wanted one place that I could just say, okay, this is what I'm going to focus on. This is the whole model I'm going to focus on in terms of my trading. And I was looking on YouTube. This is probably around 2014 or so. And I think I typed into YouTube like live day trades or something, and all these guys were posting like these huge numbers, like I made $10,000 in 5 minutes or something like that. And I'm like, that's cool, but I was looking for something that was a little bit more to my style, I guess. And I saw a video of yours that came up, and it said like I made $200 in a day or something like that. And I'm like, that's more my style. And I clicked on it. And like I remember hearing your voice for the very first time, and it was just like, hey, this is Clay Trader from claytrader.com or whatever. And I'm like, oh, this guy's just starting off. This will be interesting to see his story, as he progresses. Little did I know you've been doing this for a couple of years. And so when I was watching it, I'm like, okay, I can kind of follow this because he's not making these absurd claims of 10 grand and 30 minutes or whatever, or dealing with these penny stocks. So that was very attractive from my standpoint, watching your videos. So I started watching him a little bit more. There was another British guy that also had some videos going, and then I saw you're kind of like, they weren't fireside chats back in the day when I was looking at these, but it was just kind of like more personal stories of like, if you want to trade, these are the kind of things you need to think about, look after. And I had this guy from England had a course, and I saw your course. And I was like, all right, both these guys, I kind of see them as being someone that I kind of relate to, but which one do I want to go with? And so I do my history on as much as I can about people before I invest in them or purchase something. And I'm like, the one thing that tipped it over for me was I'm not really a big fan of English accents, because back in college, I worked for an English company, and I just didn't like it. So I'm like, all right, Clay, I'm going to go with you. And so I think I bought the chat room, the $99 thing, just to see what your chat room was all about. And
all because of the British accent. I love it. There's always a first for everything. I had somebody comment like, you would think that all these, podcasts would be the exact same because there's only so much, but there's always something different. And here's something totally different. You decided to give us a try because of no British accents. To our British people, though, Rick is, I'm going to apologize for Rick. I don't want to offend. We have nothing against British people. This is, I take no claim. This is Rick just being honest, but that's actually super funny. But
no, well, a little side history to that. So I worked for a British company called WDP that we made paintball guns, like the Angel paintball guns and stuff. I worked for them, and I dealt with them all the time, and it was so dang hard listening to them over the phone just because of the accent. And I was like, if it was hard back then, I can't imagine trying to, learn something that I want to make money off of.
That does make sense.
And having to come through. So it's not anything personal at all. It was just a preference.
That actually makes really good sense, especially when you're trying to learn something that where your money is going to be on the line. You need as clear path to sailing as possible.
Yep. So I got the chat room. I bought that. Watched what was going on in the chat room for a little while, and then I think I bought the very first. I can't remember. It's the very first class that you had offered.
Robotic trading, anyway, probably.
Robotic trading. I bought that. Went through that, and I thought that was pretty good. And then I think this. In 2017, like in November or December, I think, is when I finally bought the CTU.
Okay, awesome.
And I've been going through that. So since then, I've just been studying. Since I've kind of been doing this off and on, just the whole trading thing, I've been running some very small trades, nothing major, keeping my risk very low. To me, I don't like, putting all my money out there and, just saying, what happens or whatever. I'm trying to trim down it's a whole reality for me, trying to get away from the investing side and switching that over to the actual like trading, day trading, swing trade type options that I'm looking at now. My brain does not work, lickety split. So I don't think I will ever probably get into like the day trading aspect of it. I'm more of a swing trader. I like to contemplate things, look at things in terms of daily charts and whatnot. But I just finished up the RVR class last week or so, and a lot of stuff that you were talking about in there was stuff I was already doing it, but I never really thought about it the way you were talking about it, in terms of like, your 3-for-1 and all that kind of stuff. And that's your risk reward. I mean, I would think of it as like, if I make 3 times as much of my money, well, that means I have, I can be bad on 2 trades and I still have made money. That was the way I was looking at it. I never like actually put it down on an Excel sheet like, how you have. So it's just good seeing it from a different perspective, than what I have for a while.
And it's also one of those things where you can have your ratios, however you want to define risk versus reward, but all those have to definitely make sense. And how do you define will make sense? Well, that's where the chart comes into play, because you can have 3-to-1 all day long, but that doesn't mean that necessarily makes sense from a logistic standpoint and makes sense from kind of the reality of the situation. And again, what's the reality of the situation? Well, that's the power of how price and volume is acting, and that's what a chart is focused on. So, I mean, is that kind of safe to assume you kind of saw things and you realize, oh yeah, and things are also making sense from, not just some random, 3-to-1 or whatever, the ratio may be.
Yep. Yeah. I mean, looking at support and resistance and all that kind of stuff. And then like, when you're typing in your numbers and everything and be like, okay, well, that seems like it'd be a pretty good risk reward setup. What I've always done, since 2013 or so, I use TradingView for my crap. Can't think about
like your RVR type
for my scanning stuff. For my scans and stuff.
Yep.
Yeah, for my scans, I use TradingView, and so in there, I actually would put in there my my buy point, what I think I was going to buy it for, what I was going to sell it for, and then my stop loss. I'd put all that in there, and then I would say like, this is the actual cent amount or dollar amount that I'm risking. I'd put all that information actually on the chart, so that way when I look at it, I'm like, oh yeah, I might come back to it later, a couple weeks down the road, and I was like, oh yeah, this is how I had this set up, how I was going to do that, and see how it all played out. And even for the trades that I take now, I have it right on there just so I know, this is where I'm at. And that way I don't have to like go into my trading platform and look and say like, oh, did I have a stop in there? Like, I already know this is where my stop is. I don't even have to think about it at all. Which is very helpful just in terms of a time saving aspect for me.
Right. No, and time, as we talked about earlier with those decals, time is definitely of value. So yeah, any way you can save it is always wise. What exactly, I'm assuming, are you just trading stocks, or are you practicing with options? What exactly are you trading again in very, very small size? Because, many times you say, well, you shouldn't be trading as you learn, but you definitely qualified all this with saying, I mean, you are definitely just, I'm correct, right? You're dipping your toe in the water, right?
Yeah. Yep. And in terms of like, it's very small amounts. So for me anyway, like when I say it's very small amounts, if I make, $25, $50 on a trade, that's good enough. I mean, I've made, a couple $100 on some trades, but it's just that I never got stopped out. Every single time it progresses up, I just increase my stop. So if it gets stopped out, I've already made money. But the minimum loss that I take is not any more than $50. I mean, that's just in my mind. However it breaks out or whatever, usually it's around the $50 mark of, I say, I'm not going to lose any more than that. And that comes into the RVR things of what my setups I like. Forgot what your question was now.
No, that was it. I was just curious. Oh, well, you answered it. You're doing stocks, right? From what I gather.
Yeah, stocks. Yep. I'm just doing stocks. A lot of the stocks that I've been following are ones that I've been following for 5+ years. I mean, there's probably a list that I have that's maybe 15. I've watched those 15 for the past however many years. I'm looking into trying to find, in my scans now, I have another list that are like weekly scans, kind of like with your weekly list.
Yep.
I have my own weekly list as well that I have for my scans that I'm looking at, and putting all the information right there on the chart, so I know, like, this is kind of what I'm looking at, just so I don't have to go back and look, and because I don't have a whole lot of time to look at this with a family and all that.
Man, and you're making all kinds of. You're
night.
the battery man, Rick, the battery man. Yeah, of course you don't have any. That no. I guess, and if you don't have to answer this, 'cause I guess somebody could reverse engineer the math. But your $50 loss is what you're looking to take. What percentage of your account would that be if you take the $50 loss? What sort of corresponding percentage would that be?
2% maybe.
Okay, all right. So I mean,
it's very small. It's very small, and that's just part of it. Like, I'm not there to go full blown yet, and right now it's just like I paper traded for, let's see, I paper traded from about July of 2017 till about November, December frame. I paper traded about in that time frame, and so now I'm slowly starting to actually build actual positions with real money. And since November, I think I've had maybe 10 negative trades, but everything else has been positive. And given they're not big trades by any means, but it's just slowly kind of building the confidence to say, like, I can do this, because it's one thing to paper trade where there's no risk at all and say, oh, I can do this, I'm making great trades. But as soon as you put money on the line, even if it's a little bit of money, your mind starts going all over the place and be like, what if this goes down? I could lose this money. And it's definitely, you got to, you talk about being a robot, getting that. You need to have some experience once you get in there. And I guess I'm in that right now, where I'm just slowly getting my feet wet to understand, okay, I have rules. This is what it is. I could potentially lose this money, but that's what my stop loss is for. That way it's not like I'm just going to, go crazy or lose my account.
No, absolutely. And I got to make a huge point here. And we've had other people say what you are, which I agree with. But then we always said apples and oranges. Yes, Rick is technically trading as he learns, quote unquote. But he's actually going through structured learning. His quote unquote learning is not, I was at that YouTube video, then I went over to that YouTube channel, and then I went to that blog, and then I went to that person's social media account. And all these people are different. And but I know the sea of free information is a very, very risky place. But Rick has a very structured set of tools that he has learned about. He's done his research. He obviously, chose to go with me because I don't know. That's not a British accent, but you remember why he didn't choose to go with me. But so yes, he is trading. But not only that, the second layer of context is very, very small. I mean, a max loss for him, like you said, is 1 to 2% of the account, if that. And then, kind of the final third thing is, well, geez, it sounds kind of like a waste of time. I mean, you're just small losses here or small wins here and there. But he is not doing it right now to just go out and make a killing. He's doing it. He's building up the mechanics. He's building up the scalability of his strategy, both mentally and then just from a practicality standpoint, his chart vision, what he's seeing, what he's analyzing. Is it actually right, or is his eyes deceiving him? And Rick, it sounds like you got some pretty good chart vision if you've only had, what you said, 10 losing trades since 3 months ago. I mean, how many trades do you think that's covered?
There's probably 150 maybe in there.
Okay, nice. Now, what is keeping you from just, because I don't know. Yeah, you remind me a lot of myself in our kind of risk adverseness, but I don't know. I think even myself, what is keeping you from not just, slamming that pedal to the metal? Because, I mean, that's a super high win rate. And, super high win rates are very possible. But what's keeping you from not just roaring up to full speed? I mean, that's I don't know. I think most people, myself probably included, I'd be, and I'm not saying you're wrong. I'm not saying you're wrong at all. I'm just curious, kind of what's going on upstairs that's holding you back.
So for me, it's very hard to think about investing my money into that, where I'm still kind of like trying to get my figures out, because even though that is a high percentage of win ratio, I don't feel like I'm ready quite yet. There's just something within me that's just saying, there's more to learn if you're going to do this on a bigger scale. The other thing that I have that I think about is, my family as well. For anything, if you guys are married or whatever, you got to talk to your wife about this.
Yep.
My wife and I have talked about this a lot. I've said, can I just pull some money out, and start doing this a little bit more heavily? And, she is very much hesitant about that, because when she was growing up, her family had lost a lot of money in the stock market. And so it's very much a fear thing. And so I slowly have to prove to her that, this could be something that actually is going to add value. And I'm not just going out there and just risking our money. I mean, there's actually, reasons behind the way I do things, an actual trade plan, getting everything set up, and having her see that and understand it. She's got to be behind this as well. And she's not quite there yet. And so a little bit of that is I'm holding back, because I have to prove, I want to prove to her that, I can do this.
No, that's
for a long time. And another thing to it is there's different forms of the market too. I mean, we've been in the bull market for so dang long. You may be able to make money in a bull market, but what happens when the market switches around and it turns into a bear market? I mean, there's definitely different, you got to go about it, I think, in a little bit different way. And so you can't just look at, one section of time, say 6 months or a year or whatever, and be like, oh, now I can day trade. I'm going to do this for a living. To me, I need a little bit more time personally, to go into it full bore.
That makes a whole lot of sense. And, you hit the nail on the head. I couldn't agree more. Ches and I have talked about in a past podcast, as I'm sure you've heard, but I mean, if you have a significant other, don't be doing this stuff behind their back. Please don't be doing any of this behind their back. You got to be full communication, because you just that's going to mess things up, not only from a trading perspective, but from like your freaking life perspective. Just be in full communication, and that makes sense. I like how you're respecting your wife's boundaries, and I can totally understand where she's coming from, if she had that experience with it. But I would say that you're off to a good start in terms of proving this stuff, and absolutely right. The markets can change, things can change, but that's why those stop losses are always being put into place. And I guess, is there anything? Usually we ask the strengths weakness question. I'll answer the strength question for you. Your work ethic, your ingenuity, I think that's the right word, and then you clearly have some good solid chart vision. But as far as a weakness perspective, or something you want to work on, is there something out there that you kind of are aware of that you need to keep on hammering home at?
I think it's just, once I get money into the market, sometimes I second guess myself a lot. A chart may start turning down, and you're like, oh man, I shouldn't have made this trade.
Yes. Welcome to the.
There's stuff like that. And so I think it's just getting comfortable with actually when you have money on the line, just knowing that, everything's going to be okay, because you have your plan in place. That's just getting your emotion out of it. That's what I'm trying to really work on now, is just, the money's there. I have a plan set up. If it goes my way, awesome. If it doesn't, no big deal, because, I have my boundary set.
And
I would say that's what I really got to work on.
And just to give you my 2 cents from listening in, not only are your boundaries set where you are okay, I'm assuming you're okay, right? Like if it hits that $50 mark, it's not like that's sending you into some deep depression or anything. Is that a...
Oh, yeah. No, it always sucks.
Right. But it's not
it goes
like
down. But yeah, it's no big deal.
Okay. So, from your emotional standpoint, A, it's no big deal, and B, even if it does happen, you have a very high win rate strategy that is going to overcome it. So I don't know if that can help your mental state at all, but just have confidence in the trade plan and confidence in yourself. But I can still totally, I don't think that ever goes away, where you get in a trade and then right away it goes against you. You're like, well, crap. If I would have just done this, that, or other, I could have saved 3 cents or 4 cents. And then all of a sudden the voices come up and it tries to freak you out, and you're like, wait a second. this isn't an exact game. This is kind of like horseshoes and hand grenades, where you're not trying to get exact areas. You're trying to get more of a range. But that's funny you bring that up, because I think a lot of listeners can probably totally relate to that voice, where as soon as you get in, you're like, well, that was stupid. What was I thinking? And you're like, wait a second. No, calm down.
Yep. Yeah. And that's especially like getting out of trades. Like, some before like you're looking at a trade and you're seeing it go up and you're like, oh man, I made $300, and you're moving your stop up, and then it may drop down and you only make $100 or whatever. And you're like, well, crap, how come I just didn't get out the top? But your mind plays tricks on you, because you're like, well, I could have made 300, but you think about it, it's like you still made $100 or $150 or whatever. It's like, just be thankful for that you got that and you didn't have a lose.
Yeah, no, the voices in our head, they always are operating in hindsight. They carry around a big old club, and that club is called hindsight. And it doesn't matter what hindsight says; they'll always tilt it against us and make you think that, But it sounds like you carry around a club too that says perspective. And yeah, you still made $100 for sitting in your. Well, I don't know if you're sitting in your underwear, but you're sitting at some electronic device pressing buttons, and you just made $100 or $150 or whatever. So it could be a lot worse. But I can totally relate. And I don't know if those voices ever necessarily go away. But I mean, the more you do it, the more charts you stare at, that stuff will eventually, it'll start to wane. Well, looking at the time, I don't know if this is going to ever happen, but, and I don't know if you're aware, but I've started a moneywithclay.com site, which personal finance, stuff like that. But I don't know if I'll ever do a podcast for it, but if I am, you totally got to be a guest on it. Would you be a guest on a potential moneywithclay.com podcast about just hustling and how to get side income? Because that could have been a whole podcast in and of itself. But I was thinking the whole time, like, man, if I ever do that podcast, Rick is going to definitely have to be a guest. So I have commitment from you that you'd be willing to come on that one.
Sure, I'd help you.
Perfect. And would you come back and do this one again?
Sure.
Because Ches is going to be bummed when he listens back to this. He's like, oh man, that was Rick. You get good stuff here. So before we we got to wrap some stuff up. But Ches, as a time machine, as I know, and if I were to lend that to you, you can go, take that back to some point in the past. What would be one bit of advice that you'd give yourself?
I would say I wish I would have started this when I was in college. Just going back to that, I remember listening to the DTRS guy, and he was just like, if I was 20 years old, and I had the internet back in the day, I would have jumped on this in a heartbeat. And I would hear that, and my brother would say that too to me when I was in college. He'd be like, you need to start trying to figure this out now. I'm like, oh, I can do it, no big deal. But I never did, and I wish I would have, because I think things would been a little bit different now. Given you don't have the information, you didn't have the information back then as what you do now, like on the internet and all that. I mean, I wouldn't have found you if I would have started this, back in the early 2000s. But yeah, I wish I would have started a lot earlier and just trying to figure this whole thing out.
Yeah. Well, I guess later is better than never, though, right?
Yeah. No, that's true.
And if you would have started back then, I guarantee you would have probably just found only people with British accents. That's my prediction. But all right, well, now let's move into the fun questions, and the routine here. So, what is your favorite movie?
This is kind of a loaded question, because I have a lot of different genres of favorite movies. Probably Out Cold is probably my favorite movie in terms of like a comedy. I love that movie. Out Cold. Yeah, okay, it's like a snowboarders.
Oh, okay.
Snowboarders movie. That's pretty funny. Lord of the Rings, I really like Lord of the Rings too. So I would say those are probably my top two favorites.
Nice. I never heard of Out Cold. Definitely have heard of Lord of the Rings, and I'm a fan for sure. What about food? What do you like to? You're still in Nebraska, right?
Oh yeah.
Out on the farm. Okay. What do you like to eat? Food and dessert wise.
Lasagna is probably my favorite food in terms of like an actual meal. Steak is probably second, or a hamburger. Either one of those, I'm completely fine with them. Dessert, German chocolate cake is my favorite dessert.
There you go. That's I can't disagree with any of those choices. What about I don't know. I feel like let's do this one. I feel like if I asked hobbies, I think my guess would be your family would be a big hobby. So I'm not going to ask you that one. If you could travel anywhere, or maybe you want to get to this location at some point in your life, where would you like to visit someday?
Well, I already chopped off number 2 on my list a couple weeks ago.
Which one? What was that?
We went to Dominican Republic.
Oh, nice.
We went to Samana. Is where we went to. Saw the whales there. It was our 10-year anniversary for me and my wife. So that was
congratulations.
Kind of getting away. Yeah. So we did that.
Yeah, wait, so you were married in 2007, you said, right?
Yeah,
because I just had my 11-year, and I was married in 2006, so I guess the math aligns. That would make sense. Yeah. But when you say whales, you mean like the blue whales?
The humpback whales.
The humpback whales, yeah. I think they're blue whales. Maybe. Aren't those things crazy? It's like a school bus swimming in the water.
Yeah, it was pretty crazy. Like, I got sick on it because the wind had came up like crazy, but I like lifted my head off the back of the boat, and here was this whale like 2 foot away from me, and I'm like, holy crap, this thing is like, I can reach out and touch it, if I want.
Oh, wow, you got super close.
Yeah, it was really fun seeing that.
Yeah, I saw one when my wife and I were in Maui, and you got sick, like seasick type thing?
Yeah.
Hey, man, like I said, you do remind me of me. I had the same experience. We were out looking for dolphins and whales, and I'm in the back of this boat, sick as a dog, because I don't do so well, I guess. But I did see one, and yeah, that was. I would love to do that again. But yeah, good stuff. So where's number 1 though? Dominican Republic was 2. What's number 1?
That was 2. I did 3 when I was in college. That was in Germany.
Oh, nice.
Germany. I went to my foreign exchange student friend. He came over here, and he wanted me to go over there for a heavy metal festival in Wacken, Germany. So in college, I went over there and spent the summer with him in Germany and toured around. Anyway, sorry.
No, that's good stuff. I love it.
Number 1 would be Thailand. My wife went over there for a missions trip in college before we got married. And she showed me pictures and was just telling me about, just how beautiful it looks over there. And I was like, yeah, that'd be pretty cool to go over there and check that out. So hopefully someday Thailand.
Do you like Thai food?
Oh yeah. Yep.
Yeah.
That's probably my second favorite.
Yeah, that's mine too. And when I'm up at 2 a.m. or 3 a.m. sitting on the toilet, I don't even care. It's still so good. It's so good. Oh man, can you tell this is episode 100, whatever it is? I don't care anymore. Whatever. It just does. I would never have said that if this was like first probably 50 of them, but whatever. You know what? And because we're still alike, you don't have to answer this. But you're probably sitting up at. Maybe we should text each other next time at 3 a.m. and we'll because we'll probably both be up doing the exact same activity. But I'll move on.
Probably.
Yeah, there we go. So awesome.
It's funny that you say that. They were kind of similar because my wife, every time my kids come in, they I'll be watching the videos or whatever, and they'll see you up on the screen or whatever. Sometimes I'm watching your YouTube, and Hannah's like, who he reminds me of? And I'm like, who? And she goes, his mannerisms kind of remind me of you. I'm like, that's kind of weird.
Well, you're a good.
Anyway, that's not the first time.
Yeah, we'll have to.
I've heard that.
Yeah, that's funny. But yeah, they're just hearing your story. Yeah, you got to come on Money with Clay if I ever do a podcast, because I feel like we could probably strip down. I think we have a lot of viewpoints that are the same in other areas other than the market. But with that, we got to wrap this thing up. 3 words, and these 3 words would be what you would be to associate with a successful trader. So what would those be?
Perseverance, money management. I would say I know that's 2 words, but
well, that's one. We'll combine them. Hyphen. We'll put a hyphen between them. Yeah.
Okay. Because I don't know. To me, I'm very conservative. To me, we don't have any debt at all. And so to me, before I was even going to get into the market, I don't want to have any debt. So I mean, just good money management. If you got a lot of bills and whatever, use your secondary, third funds, those income sources, pay off all your debt, and then come back to market. That's my opinion on it.
And I 100%
money
agree.
Management.
I fully agree.
Third one, I don't know. Determination, maybe.
There you go. Determination.
That might be the third.
That's solid. Determination, persistence, and money management from a personal finance perspective. It sounds like you're getting at with that,
yes.
Which I do fully agree. Well, Rick, this was a great time. I hope you had a good time. And
this was fun.
Good. And I've already got you on commitment for 2 more returns, one being a podcast that may or may not ever exist, but we will definitely have to have you back on this one again to hear how your journey continues to unfold. But I would say just keep on at it. You're doing very well. So thank you very much for taking time out of your day, Rick. I appreciate it.
No problem. Thank you, Clay.
For you followers out there and listeners, a few final things before we part ways. First, if you are listening on iTunes or any of the other podcast players, be sure to subscribe, especially on iTunes. If you could leave us a rating, that goes a really long way and helps us out. Just, spreads the word, and it just is very. It doesn't cost a single dime. So if you never spend a dime at claytrader.com, that's totally cool. But if you enjoy these, leave us a rating on iTunes. That goes a long way. If you're listening on the YouTube channel, be sure to click the like button and also check out the rest of the channel. There's live trades, there's quick tip videos, there's vlogs, there's all sorts of different things. So be sure to check out the channel and hopefully you decide to subscribe to it. And then finally, if you're listening at claytrader.com on the show notes page, click that share button down below. The recorder, there is an area to leave comments. I do read those comments. I will reply to those comments. So by all means, feel free to chime in there. And like I said, I will respond. So thank all of you as listeners. Thank you, Ches, our co-host. Hopefully he's not breaking his leg right now on a ski slope somewhere. And thank you again, Rick. We will see you all back next week.
This has been the Stock Trading Reality Podcast. Thanks for taking the time to hang out. To learn more about Clay and the Clay Trader community, including the trading team, premium training, and more, visit claytrader.com.